Hey traders, just wanted to do something different today. It's not doing an update on Bitcoin or any altcoin or any asset. This video is specifically just to try to help people, but also to let people know that what our Patreon service provides is a lot of education. And so what I've been noticing in my live streams is there's just been a ton of confusion on Fibonacci. People don't really get it, and I want there to be a reference video that people can see that would maybe help them get a better grip on Fibonacci if they do. All right, so this is the video. All right, so what is Fibonacci, right? I mean, Fibonacci is pretty simple. They're ratios used to identify potential reversal levels in price action, right? And so we're just going to go ahead and get into this. Fibonacci, here it is. So there are Fibonacci numbers we use, okay, that you're only going to use a handful of them, okay? So a 23% retrace, 23.6% retrace is a Fibonacci number. It's a sequential number. All right, that is our most shallow retrace. So, for instance, if we were looking for a retrace, and we're going to go deeper into this, all right, but, you know, from the low point to high point, once we reach a swing low to a swing high, okay, a 23% retrace is really how we actually know that we have a real swing high in place, because we can't really even anchor point a swing high until we've actually hit a 23% retrace. It doesn't really make sense, because if it doesn't hit the 23% retrace, it could just be pulling back a little bit before running again, right? So that is a rule of thumb with the 23% retrace. It is not an area where people normally take trades. I mean, there is sometimes the bull pull bull flag or the bear pull bear flag hits a 23% retrace before running again, but it is not part of like the meat of the Fibonacci. Okay, so that's the 23% retrace. Where are we? Oh, okay, here we go. So the 38.2% retrace and the 50% retrace, those are the most moderate retraces, okay? And don't be confused, because the 50% retrace is not an actual Fibonacci sequential number, all right? It's a part of Dow's theory, Charles Dow, you know, Dow Jones Industrial, whatever, that guy. And Dow's theory states that after an impulse, we most commonly retrace half our value. So if the impulse was up, we most commonly retrace 50% of the way before running again, because the prevailing impulse was bullish here. So we sell off 50% and then run again. That is Dow's theory, okay? But we know that the world doesn't just revolve around Dow's theory, okay? And those are what we just call the moderate retrace zone. The 62% retrace, or the 61.8% retrace, is what I call the golden retrace, or what people call it that, I guess. And it's a pretty deep retrace, still moderate, but still pretty deep. And that is the reciprocal of the 1618 Fib extension, which is the golden mean ratio. Okay, should have that on here somewhere, I guess. I don't know. All right, the golden mean ratio is everywhere. Okay, it's in math, it's in science, it's in art. Spiral galaxies, the Nautilus, right? That is what the golden mean ratio is. We could also call it phi. Okay, and I make a joke about phi because some sororities, alpha phi, right? You know, you get it. Okay. So that is a very important retrace. That's what Bitcoin recently hit and is now exceeding, fortunately. Not by much after today, but still great to see us hit a 62% retrace. All right. So between the 382 and the 618 is what we call the golden zone. All right. That is the common retrace zone. Okay. That is where we, for the most part, mathematically, we get most of our price action reversals in that area. But it is not to say that we cannot continue running to the upside or downside to hit the deepest retraces, which is the 78.6% retrace and the 88.6% retrace, okay? That is really where all our harmonics start hitting their entries, right? Those deeper retraces, okay? So when you're developing those patterns, and then you look for confluence, and confluence is when you take different swing highs and different swing lows, and you get areas of confluence, meaning like there's a 1618 Fib extension where a 78.6% Fib extension is, and we can look into that more. That's way more complex. This video is meant to just really give you the rudimentary aspects of Fibonacci. Okay, so I hope you got something out of that, at least knowing what each fib node represents and how deep it is, all that. So we're going to go now into kind of how, Fibonacci is all relevant to the situation at hand, okay? So if I'm looking for a retrace, so if we're in an extremely bullish trend and we hit a high and we hit a 23% retrace and we know, okay, it's now fair for me to anchor. All right, it's fair for me to anchor my Fibonacci. Remember, if you're looking for a retrace target and you're in an uptrend, all right, you go from your swing low to your swing high, and that is what gives us targets. All right, so we could retrace in an overwhelming bullish trend. We can retrace 38% of the way, 50%, or 62% of the way. Those are the common retrace levels, right? That's the golden zone. This is the golden zone right here. And so as you can see, we ran down, touched the 61.8% retrace, and really nothing lower than that, bullishly haramied, and we were gone again, right? So that is how we get targets when we're in an uptrend. But if we're in a downtrend, it has to go the other way, right? So, for instance, we're in a downtrend, right? Lower highs, lower lows, lower highs, lower lows. If we're looking for targets to the upside, right, you go from your major swing high to low, and this is going to give us targets to the upside. Look, this is a 23% retrace. Once we hit this, we knew that this was a valid swing low, so we could start anchoring from our high point to low point. We did that. But then we hit the 382. We hit the 50%. And then we hit, what did we hit? Not only did we hit the golden zone, of course, we hit the golden retrace. The top of the golden zone, the 61.8% retrace, because remember, it is called the golden retrace because it is, in fact, the reciprocal of the 1618, the golden mean ratio, or phi, okay? So, wow, how crazy is that? You get targets on the upside from the low to high, or it's wherever we were, low to high, and then from on the downside, when you're retracing the upside, you go from the high to low, okay? So hopefully that can help you. Remember, Fibonacci is like reading a book. You go from left to right. You would never, ever in a million years, please do not ever go from right to left on your Fibonacci. It doesn't make any sense and it doesn't work, okay? So that's just a rule of fibs. Another rule of fibs, Fibonacci, is if you were to use a candle high close on the top or bottom, you must use it on the other side, okay? You must disregard the wicks on one side if you disregard it on the other. There is no cherry picking. You don't go wick to candle close. You go candle close to candle close or wick to wick. If there is not a wick on one side, you go the candle close because that's all you can do, and then you use the candle close on the other one, okay? That is the rule of thumb for wicks to wicks, candle close to candle close, all right? And also, what do we have out there besides Fibonacci? We had the Fib extensions and one we just talked about, okay? And so, for instance, we can just plot that beautiful Gartley we had, right? Okay, so the harmonics are what, these are all fibs, okay, Fibonacci, right, retraces. So good, we just did that lesson on Fibonacci. So look here, X to A, that's just an impulse. But we sold off, right? And when we sold off, we went 61.8% of the way from your low point to your high point. You retrace 62% of the way. That's how this is plotted. Once you start memorizing each one of these, you can start having a lot of fun with harmonics, okay? So, but for the most part, people come to the stream and be like, what is this? Like, I don't really, I don't know what these numbers are. Well, now you're going to be able to figure them out, and, you know, we do education on this stuff too. But that's what this right here means, okay? When you retrace from X to A, you retrace 62% of the way, and then you run again. Okay, and then from A to B, from your high point to low point, you retraced 78.6% of the way, right? You see what I'm saying? But the Fib extensions start coming into play here. Okay, and this is what I wanted to go into. So from your swing low to your swing high, from B to C, we would fib from the low point to the high point, and this would give us Fib extensions. And as you can see, we sold off and hit a 141.4% retrace from B to C, meaning, look, 100%, look, we ran up, we sold off 100% of the way, but then we started selling off even more. Not only did we sell off 100% of the way from the swing low, we sold off 127% of the way, and then we sold off 141.4% of the way. All right, and so that's what this is, the 1414 Fib extension. And then from X to A, from your low to high, from X to A, we retraced 78.6% of the way. Okay, right here. And this was the entry for the Gartley. And so what happens is you have this area of confluence. That's what I'm talking about, an entry zone. And we also call this the pattern completion zone, the PCZ, when you're nearing the end of a harmonic, but we won't go into that too much. But this is what confluence is. You take two different swing lows and their next prevailing swing highs. Okay, so from X to A, it's the only way you can do it. From B to C, remember you can't go right to left, right? You have to go left to right always. So you go from this swing low to swing high, and this swing low to swing high. Okay, and that's what gives us the targets for confluence right here. All right, so that's how we use Fib extensions. Confluence is good, but also when we're hitting like all-time highs, like B and B, right? All we can do is use our previous swing high to swing low to give us that. All right, in situations like this, we can use Fib extensions if we want to. All right, and I think we hit the 1272. Look, from your high point to your low point, the 1272 has been touched twice, yesterday and today. So we know that is an area where it's going to be difficult. It's going to be very difficult to break that, but eventually we would expect 5,800. Why is that? Because where we are, there is no formal resistance. I mean, there's some candle closes here. I guess this is probably as strong as this resistance up here, but I mean, you'd expect us to eventually break that and run up to 5,800, but it is not out of the realm of possibility that we won't do that. Okay, so it's just upsloping consolidation after a huge impulse. It's not really proper consolidation. But I digress. I digress completely from that because we're talking about Fibonacci. Okay, so Fibonacci give us good targets, right? So like, for instance, say you didn't use harmonics here. And I mean, this is seriously just like for education right now. Okay, so let me think here. For instance, what did we have back in April of 2018, 1 year ago? We had a falling wedge pattern. I remember this specifically. Yes, we had harmonics within it too. It's great. It's a beautiful falling wedge pattern. So when you're trading, you can use Fibonacci for targets, right? So, hey, we know there's a falling wedge. We know we're showing bullish divergence down here. We know there's a largest short squeeze in the history of Bitcoin happened. All right, all that stuff happened back in this time. So what do? We know just a rule of thumb from your high point to low point of the structure of the pattern. Our target from a breakout, or from where we found the bottom with the bullish divergence or whatever, wherever we decided to take our entry, the first target, the primary target always for a falling wedge pattern is the 50% retrace. Well, we hit it. And the secondary target, the other area where you take profit, is at the 618. And we go over this all the time in the live streams. Be sure to check them out. 6 p.m. Eastern and 11 p.m. Eastern, multiple times a day, every day. Okay, so falling wedge trade, beautiful. Both targets hit, and then up here we developed bearish divergence, and that was it. Remember, Fibonacci is just like a pattern. Fibonacci is just like an oscillator. You don't use it by itself. You use it with other variables, okay? So for instance, right up here, I mean, we had bullish divergence down here like crazy. So look, we're not just using, we're not just using one pattern. We're using coinciding variables, all right? So we had MACD bullish divergence, and in the end, we had RSI, tail end bullish divergence. Right here, before we broke to the upside. So 1, 2, 3 variables, we broke to the upside, and we hit the targets, and then up here, it was very, very slight. You could barely see it, and I think we were showing was it a bearish pattern to a rising wedge? Yeah, we were showing a rising wedge as well up here. And what was happening when we made a high on price and then we made a higher high on price? We had lower levels of positive momentum. We also had lower levels of relative strength. So you don't just use Fibonacci alone. You use it with coinciding variables. One would if they wanted to have the best chance of success anyway. All right. So I wish there was more I could really think of for Fibonacci right now. We went into confluence, we went into harmonics, we went into all the retraces, everything really. So I guess I'll leave you with that. If you have any questions, just leave them in the section below. If you have any good words to say or bad words to say about my education, please let me know. Hit that like button, that bell, that sub. Again, check out our Patreon, because this is what you can expect in our Patreon. We have just a lot of education. We do trade setups, and we also do Discord exclusivity. So if you have questions about things like Fibonacci or anything, I'm there to answer them for you, okay? So I'll see y'all in a little bit. Until next time, respect the TA.